Welcome to our video on the best investment options for 2023. In today's market, it's important to consider not only the potential return on investment, but also the level of risk involved. In this video, we'll be discussing several options for those looking for the best investment opportunities in 2023. 1. Equity mutual funds. Equity mutual funds are a type of mutual fund that invest primarily in stocks. These funds are managed by professional fund managers who make investment decisions on behalf of the fund's investors. Equity mutual funds can provide higher returns than fixed deposits, with an average return of 12 to 15% per annum over the long term. However, they are subject to market fluctuations. Your investment is tailored according to your risk tolerance. It offers the ability to diversify your investments, so overall the risk is a lot less than traditional investing. It's important to note that mutual funds are best suited for investors with a long-term investment horizon, as they tend to perform better over the long term. 2. Real estate. Real estate investments can provide steady rental income and capital appreciation over the long term. However, it's a relatively illiquid investment and requires a large amount of capital. It's best suited for investors who have a large sum of money to invest and are willing to invest in a physical asset that can appreciate in value over time. With the growing population, the demand for such properties will only rise. It's important to note that the performance of real estate investments is dependent on the location and type of property. 3. Gold. Gold has always been considered as a safe haven investment and a hedge against inflation. It can provide returns in the form of appreciation in the price of gold and also through gold bonds and ETFs. Gold is considered to be a safe investment as it maintains its value and is a hedge against inflation. It's important to note that the performance of gold is dependent on the global gold prices and the rupee-dollar exchange rate. 4. Startup investment. Startups have the potential to generate higher returns than traditional investments, but it's a high-risk investment as most startups fail. It's suitable for investors who are willing to take a high level of risk for the potential of high returns. It's important to note that startup investments are highly speculative, and it's best suited for investors with a high risk tolerance and a long-term investment horizon. If you want to learn how to invest in a startup, stay tuned as we'll make a video on that soon. 5. National Pension System. NPS is a retirement savings scheme offered by the Government of India. It offers a mix of equity and debt investments, making it a relatively safe option for investors, with an average return of 12 to 15% per annum over the long term. It's important to note that the returns from the NPS are market-linked and are subject to market fluctuations. Additionally, it's best suited for investors who are planning for their retirement and have a long-term investment horizon. It's important to keep in mind that there is no such thing as a one-size-fits-all investment. Your investment portfolio should be tailored to your personal financial goals, risk tolerance, and time horizon. It's also essential to diversify your investments. As always, it's important to do your own research before making any investment decisions.